Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today is Thursday. I am traveling tomorrow, so as I promised, as I've let you guys know last weekend, that I'll be doing the video today. So quite interesting week this week, right? I hope you guys didn't get too flustered up or too emotional, or hopefully you guys are not getting angry about this recent decline. And I don't know. I feel like I sound like a broken record, or I feel like it's really redundant for me to say things over and over again every time when there's a decline. I mean, some of the things that I said here and here, and even going back to 2016 and 17, every pullback, there's always somebody somewhere shouting out that the crash is coming. And if you kind of look at it that way, there's a reason why people are shouting crash. If you haven't been profiting last several years, 4 or 5 years, then you really wish there's a crash, because you really don't want to chase it up here after you missing out all this run on the S&P. And that's how kind of market continues to leave many people behind, and only remnant of people, a small group of people, only the few will able to profit and participate in the run. And this is the same thing I always say on every pullback since early 2016. Obviously, please don't ask me. This is a stupid question when you do ask me, are you still long-term bullish in the market because we saw 1 or 2 days of decline? Please don't ask me that, because market sentiment, long-term trend does not change because of a couple days of decline. As I've tweeted out, don't live your life like if it's a bullish, you think the market is going to go up forever. When it's bearish, you think the market is going to crash. Living back and forth, flipping back and forth every single day or every single week is just that. If you are that person, hopefully you know that that's very amateurish, and there's a lot to learn. Admitting that you have shortcomings is first way to kind of know that you need growth in your life. And I've said before that if you know that you're stupid, then you're smart, because usually the stupid people think they're smart, right? And there's so many people on Twitter and social media always kind of wanting to tell the world that they've been right or they're wrong, or every single day, yeah, I told you so, it went up, it went down, it's going to be down day tomorrow, it's going to be up day tomorrow. They're trying to forecast what's going to happen next couple of days, right? And then if they're right, then they're going to make a big brag out of it, right? I'll tell you something, you could be right today or tomorrow. Maybe you're right next week. Maybe everybody told you that you're right about this decline, or whatever it might be. But only way to truly understand where you are, right, as a trader investor, is to understand where you're at with your performance, with your track record, last several years, last 4, 5 years, 6 years, or how many farther you can go. You could be right, but if you're losing money, anybody can make money here and there. Anybody can able to hit some winners here and there. But year in, year out, if you look at your track record, if you look at your performance last several years, that should tell you that, hey, you know what, I need to work on these areas. Versus you just pretending to be somebody you're not on the social media. Again, if you know you're stupid, then you're smart, because then now you can work from it. And so there's a lot of egotistic kind of things going around a lot, especially in social media. I don't do Facebook. I don't do Instagram. I do Twitter, but you don't ever see me talking about anything personal, because I'm kind of an old-fashioned guy. I love to either, I love to meet with a friend one-on-one or in group settings and look at them face-to-face and have interaction that way, and then catch up, like what you've been up to, what have you been doing, right? Versus stupid Facebook messages like how you been, right? It's stupid. I think it's stupid. So I don't do Facebook, I don't do social media. Twitter, I made Twitter account for you guys, so I can share something of what I think of the market. So anyway, so yeah, my long-term outlook has not changed at all. My long-term outlook it didn't even change when this thing did this. Do you really think that my long-term outlook is going to change because it did that? My long-term outlook didn't change because it did this. I bought it here, I've been buying it here. And if this thing does come down, I'll buy more. I mean, really, if you think about it though, I've been long since these areas. My long-term outlook has not changed since early 2016. Do you really think my long-term outlook will change because we had one down day? You know, so please don't ask me that if my outlook has changed or not. If my outlook does change, then I will make sure to let you guys know. I will make sure to do a special video or something like that to letting you know that why now I am bearish in the market. But as you know that I'm not a day trader, I'm not a short-term trader, I'm not an overnighter, I'm not a penny stock chaser, you know, Bitcoin, cryptocurrency addicts. I trade long-term, I invest in the long-term. So, and it's been working well for me and for several years, and I continue to believe that the market is in a healthy state. and that's where I'm at currently. As far as these puny like 6% corrections, I just think that it's just market giving me another opportunity to accumulate a little more, and that's all it is. And you're trying to like, oh my god, we got this big decline now, oh my god, the yield curve, oh my god, the tariff, oh my god, the interest rate. I mean, don't you tire of getting swept away and getting bullied by the market and manipulated by the news? Didn't you already learn your lessons in 2016, 17? Maybe 2012, 13, 14, 15? Anyhow, so we're back at this level where we're at like, I don't know, like a week ago or so. And I think this was this day, August 5th, right? August 5th, I tweeted out this here, right here. You can see it was August 5th, right? That was right on this day, right when this thing came down. And that's the same day I tweeted out that this might be that we're getting close to bottoming in this vicinity, right? This vicinity, and we surely kind of did look like it was. We did see a gap up, and we talked about the last market update video. It should have been bigger. It's a smaller gap up. It wasn't entirely textbook island bottom. If it was a big gap up, it was a big island, I think, yeah, it would have had a pretty good strength to get up there. But we did have a good move, though, on that day. Pulled back, some shenanigan move, and then pulling right back. So we're just kind of basically back to where we were in August 5th. However, just so much commotion has been created with this move. There's so much emotion has been involved, and so many traders are freaking out, just like they've been freaking out on every single pullback. Do you really expect the market to go up every single day? It's not. This is like, people like always freak out, right? But this is like a normal behavior. This is what the market does. Market it's not going to go up every single day. It's going to have its correction. When was the last time market just went straight up without having any correction? 6%, 7%, 8%, 9%, 10%. It's a normal behavior, especially for the fact that market went up 25% since December lows. NASDAQ 30% in just 4 or 5 months. Well, what do you expect? What a great recovery it was. You see, that's what bears do. That's what most people do. Instead of focusing on the positive, they focus on negative. The negative people usually attract more negative things in their life. That's why they live with fear. The positive thing is the market went up and made about 25% run very, very quickly. We got these little pullbacks. That's given. After that kind of move, I'm fine with that. And if anything, that would be give me a more opportunity to accumulate more before market is heading to 320, 310 there towards the end of this year run. So we're back at this level, and we talked about that. We're getting close to bottoming in this vicinity. And if you can go and check my tweets, the feeds. It's not like I always say every single day it's bottoming, and then I'm just going to show you one tweet that actually, no, you don't. If you've been following me long enough, I look at certain levels. I'm not sure that I don't really say anything, as you guys know, but I actually thought that this level is pretty close getting to the bottom. This was this day. We did initially find bounce, and even just a couple days ago, right? Just like this. This was just a couple days ago, right? And it did look like we had a pretty good continuation, held that, maybe a little intermediate and higher. It looked like we could potentially continue higher. But hey, market does what it does in the short term, and this is a reason why I don't like to focus too much on the short-term movement. This is why I stay longer term, much longer than most of you guys that are listening. So now, but I kind of thought, you know what, there might be some shenanigan. That's what market loves to do. There's some weak dip buyers, weak dip buyers, maybe new dip buyers, maybe some bears turn bull. These guys are not seasoned traders. These are not some disciplined traders. So, they thought, last time we saw some big move, market did recover, went to new all-time high. So a lot of maybe shorts, bears turn bullish, or a lot of scared cash people maybe. Maybe they went bullish, they flipped bullish, they missed out 25% run on the S&P, but maybe, this is that little pullback, and hey, why not buy this dip, or why not, maybe they didn't buy it here because they were scared, so maybe they bought it up here, and the market kind of figured out, these weak dip buyers coming in, trying to be cute with the next all-time highs move. So I kind of thought that when I tweet this out on this day, I thought this might be a great level for bottoming, but it seemed like it's kind of been, there's been some good swift move. I know May was a lot of grind, you know what I mean? So I actually rather see this in coming down faster, so that way maybe we can do faster move. But a lot of times when there's a faster move, it gets a little bit more volatile, and it's a little bit more shenanigans involved with that, because it's just boom, 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 big gap down, right? So then I thought, yeah, but the worst case scenario though, we may be testing 200 SMA at 277s on spiders. So that's kind of what I was saying. I kind of feel like this could be the bottom, which initially we saw that, but it looked like there might be some of these newbies trying to buy this dip, not understanding market could potentially give you some shenanigan, and I think that's kind of what that was. So we're holding 284. If we don't hold this level, we are seeing a little bit of doji, dragonfly doji type of candle. The dips are getting bought in this vicinity, but if we don't hold that and fill this gap soon enough, there's a good chance we come back to 277 there. So right now, this is a pretty gigantic gap. That's a big gap down. We also got this gap still open. Last time when bulls got up here to fill that gap, failed to fill the gap. I even tweeted out that that might be a key point. You guys remember, that might be key to what's going to happen in the next week or so. Remember, I'll post it on the left side here on your screen. But that was kind of the key. That gap need to be filled. And we talked about in the last market update video that the gap, the gap should be, it's better. Remember I talked to you, go back and watch my market update video from last week. I said it would be better for the market to go up, fill this gap, and then pull back, versus if it doesn't fill the gap, and then if it start pulling back, we're going to come back down, we're going to come back down and fill these gaps and maybe coming back down these lows. Remember I talked about that. And then now we got this another gap down. So looking at things with the current situation with these data that I have at hand, it does look hectic for the short-term buyers, for the bulls in the short term. Because if this gap gets filled, it's going to act as resistance. If it doesn't get, it might get a little bit up here and then pull back, and we may come down to 277, retest the 200. I mean, if we do, great level to accumulate more in this vicinity. But I'm going to tell you what, right now you think they're like, yeah, oh my God, yeah, okay, once it comes down to 277, I want to buy that dip. But once this actually comes, when 277 actually comes, I guarantee many of you will hesitate. Many of you thinking possibly crashes may be coming. So I guess only time will tell, but that's kind of what I'm thinking here. If bulls really want to turn this around very, very quickly, would be then, best way would be then getting up here, maybe feeling some gap, and then maybe gapping it up, fill this gap, pull back a little bit, retest the gap area, and then go. That, I don't know. At this point, we don't have enough data to say that's what's going to happen. So that would be the fastest way for recovery. If not, we start fizzling here and not able to fill the gap entirety of it, we're going to start pulling back. If it does go up, fill the gap in entirety, that's not bad. How the gap is so big that it's going to act that much bigger resistance, and that could potentially get back down to here as well. I think only way, if we've been seeing a lot of shenanigans, gap down, gap up, pull back, gap, big up move, big gap down, big flush there. It's been a lot of choppy, a lot of volatility. There's a small chance, just like nobody predicted that this was going to happen. If anybody said they predicted something like this going to happen, trust me, they've been predicting all kinds of stuff throughout this year, and they lost everything. So, nope, after this move, I surely didn't expect it to see a gap down like that, but we did see that, right? So there could be some more shenanigans left in the cards where, this thing goes up and maybe we see another gap. That would truly put a dagger into bear's heart if we see that gap up, like big gap up, and making this on like island. I think the probability of that low, but we may happen, it may not. But I am going to give you 284, 277. 284 and 277, right? See how it plays out next week. These gap must be filled as quickly as possible. Bulls want to turn things around quickly, gap it up, and fill this gap right away. Get up, pull back, retest at 20, 50. So it will go something like this, 20 coming down, 50 coming down. So what it first has to do, it has to kind of grind higher, gap it above it, fill this gap, and it's going to look like it's going to continue higher, but pull back, right? And then retest those 20 EMA, 50 EMA, and then get up and retest that island and reversal gap area. And that level is not a bad level to accumulate some more too if you want to wait for some kind of confirmation to the upside and then get up. Again, that I think as of today, as I see just this candle here, has a low probability. But if I see something that looks more like it's going to do something like that, I'll tweet that out at 2K Kim, and we'll follow up again next weekend, right? Today we'll just stick with Spider. I did more deeper analysis. More of a short-term, and so we'll skip other, tickers, and so I do have to get going here as well. So you guys, tomorrow, no market update. You guys have a wonderful weekend, and good luck trading next week. I'll come back for you guys next week, and if I see any kind of developments, I will tweet things out at 2K Kim. So good luck trading next week.